It's time now for a look at the latest business news, starting with that trade deal signed between the United States and China. Our business editor, Stephen Carroll, is here with the latest.
Naomi, it's an agreement that commits China to buying more US goods and reduces some of the tariffs that the US has imposed on Chinese imports. But tariffs will remain in place on more than two-thirds of all of Chinese goods going to the United States. The Chinese Vice Premier Liu He has been speaking about his country's commitments under this agreement. He told state media that supply and demand will dictate China's purchases of farm goods from the US. Those commitments being hailed by President Trump as a victory after 18 months of a trade war between the world's two largest economies. Sam Bradpeast reports.
It is a deal that will reduce the trade tensions which have slowed down global growth, hurt American manufacturers and weighed heavily on the Chinese economy. Donald Trump marked the signing in a typically triumphant style.
This is an unbelievable deal for the United States, and ultimately it's a great deal for both countries, and it's going to also lead to even a more stable peace throughout the world.
A sentiment echoed by the Chinese Vice Premier.
It's good for China, for the US and the world. It's a mutually beneficial and win-win agreement.
The US government began a trade war with China in July 2018, imposing huge tariffs on Chinese imports. But phase one of this deal paves the way for increased trade. It will see China dramatically increase its purchase of American goods and services by $200 billion over the next 2 years. It also sees the US drop plans for new tariffs and cut existing ones in half. The agreement includes provisions that will make it easier for US companies to do business in China and has seen China commit to better protecting intellectual property, avoiding forced tech transfer and refraining from currency manipulation. The 86-page agreement does not, however, address the issue of Chinese state subsidies, a policy that the US administration considers unfair economic practice and used as justification for starting the trade war in the first place. The elimination of these subsidies may be a key US objective in phase two of the negotiations, which are not expected to conclude until after the US presidential elections in November this year.
Now, there's not much reaction on the Asian markets today to that deal being signed. Of course, it had been announced some time ago and the key details flagged in advance as well. The Nikkei in Tokyo and the Hang Seng pretty much trading flat. The Kospi in Seoul seeing some gains but falls in Shanghai as well. Moving on, China's largest utility company, State Grid, is preparing for a sharp fall in economic growth there, according to reports. The Financial Times says that internal forecasts at the state-owned monopoly show that it's bracing for growth to fall as low as 4% in the next 5 years. China will publish its official growth figures for 2019 tomorrow. The world's second largest economy has already seen growth fall to its slowest pace in 30 years. Argentina's inflation rate has hit its highest level in almost 3 decades. The rate of price increases reached almost 54% in 2019. Prices have spiralled as the country faced a currency crash and deep recession in the past 18 months. Health and communications saw the biggest price increases last year. Now, to find a rate as high as this one, you need to go back in Argentina as far as 1991, when the peso was pegged to the dollar. Now, abandoning that peg in 2001 led to the last major spike in inflation. That was when Argentina defaulted on its debts in the midst of another crisis. The current government has set a deadline for the end of March to renegotiate its debts this time around, but experts say that price rises may continue.
Sectors adjust their profit margin based on what they believe they earn compared to other sectors and not with respect to their costs. And therefore, there is this constant belief that the state will be an arbitrator in these types of situations.
Sales of the French carmaker PSA plunged by 10% in 2019 because of a slump in the Chinese market. PSA owns the Peugeot, Citroën and Opel brands and sold just under 3.5 million cars globally last year. China saw the biggest fall of over 50%, while sales dropped in Europe as well by 2.5%. This disappointing year comes after 5 years of increased sales for the PSA group. And finally, for me, he may be serving a life sentence in prison, but the El Chapo brand is apparently still worth something. The Mexican drug lord now has his own beer called Chapo 701. It was launched by his daughter, Alejandrina, who runs a fashion and lifestyle company built around her father's brand. The 701 is a reference to the ranking that Guzman reached in the Forbes magazine Rich List in 2009. His wife has also launched a clothing line built around her husband's image. Guzman was sentenced in the US last year for charges of trafficking cocaine into the United States over a period of 25 years, but his family seemed to have found a way of making money out of that
Quite
as well.
incredible, Stephen. I'm not sure it's a beer I'm going to be rushing to try.
Me
I'll be
either.
honest. OK, Stephen, thanks very much.